Canada's annual inflation rate continued to ease last month. Data from StatsCan shows the consumer price index rose 2.5% in the year ending July, matching expectations and marking the slowest annual increase since March 2021. The report keeps the door open to more interest rate cuts, but we spoke to one economist who highlighted challenges that remain with shelter inflation.
That's where a lot of the remaining sort of price pressures are when it comes to household finances. And so I think a lot of folks are wondering, well, where's the relief, if you can call it that, in that space? And that's not an area where we're anticipating any kind of a cliff. Like, we're still seeing very high levels of inflation. It's coming in consistent with what the bank is anticipating, but we're likely to still see still strong levels of rent inflation on a year-over-year basis. Again, downward trajectory, but still strong levels in both owned and rented accommodation.
Shares in Interfor down again, losing about 2% today. The lumber company says it is indefinitely curtailing operations at two of its U.S. sawmills. Interfor says the move is in response to weak market conditions. The wind down of the sawmills in Georgia and South Carolina is expected to be completed by the end of September. About 180 employees will be affected. Shares in Palo Alto Networks surging after the cybersecurity company topped profit and revenue expectations in its latest quarter. Palo Alto also provided a strong sales forecast for the year and boosted its share buyback program. The results drove the company to a record market capitalization of $121 billion US. Toronto stock still down about 0.5% today after hitting a record high close yesterday. And let's have a look at the US markets, which are also close to record highs. They too taking a breather today. Price of oil has been stuck in the low 70s. So far, Iran has delayed a retaliation against Israel after the killing of that Hamas leader, Ismail Haniyeh, in Tehran. I mean, that was a real red flag there for Iran. So far, ceasefire talks are continuing, trying to end the violence in the Gaza Strip after Israel invaded that area in response to Hamas attacks on Israelis. Our guest says the risk premium from this conflict seems to be fading, and we could see pressure on oil for the rest of the year. We're joined by Gregory Brew, senior analyst for Iran and energy at Eurasia Group. Thanks very much for coming on the show.
Thanks very much for having me on.
I mean, Israel really got in Iran's face here, didn't they? They blew this Hamas leader up in a guest house in Tehran.
Yes, this was a profound security and intelligence failure for Iran. Ismail Haniyeh was assassinated probably by a planted bomb in his guest house in North Tehran just hours after attending the inauguration of Iran's new president, Masoud Pezeshkian. So this was a failure. This was a humiliation for Iran. And Iran has repeatedly vowed to retaliate against Israel, although we've all seen that they've taken their time in issuing that retaliation.
You think one reason is that America has been stepping up its military presence in the area, and Iran is inferior in military terms to Israel and the US, so it could have more to lose here.
Absolutely. Iran is in a strategic dilemma. As I mentioned, they vowed retaliation. They've said very strongly, very repeatedly that they will retaliate along the lines of what they did in April with a direct attack against Israel. But Iran faces not only the threat of Israeli retaliation. Israel has a superior military. It also faces the threat of U.S. retaliation. The U.S. has moved additional warships, guided missile submarine, additional fighter squadrons into the region, and has also warned Iran repeatedly and quite explicitly that there would be significant consequences if Iran attacked Israel again. So the Iranians are taking their time. They have continued to say that they will retaliate, but there continues to be significant risks of escalation against Iran directly if it chooses to attack Israel again.
If there's a ceasefire in Gaza, could that offer Iran a face-saving out from having to attack Israel?
I think so. Iran has put a decent amount of stock in getting a ceasefire in Gaza. They probably see it as a potential off-ramp if there is a ceasefire in Gaza that allows Hamas to remain in place. It would also give them a reason to de-escalate the situation between Israel and Hezbollah along Israel's northern border. But the ceasefire talks in the short term have given Iran and Iran's leadership an excuse not to retaliate. They don't want to take action that could potentially undermine a deal, even if a deal for the moment still looks unlikely. There are still wide gaps separating Israel from Hamas, and it doesn't look like those gaps are narrowing, even with the talks that are ongoing.
Is there any prospect that Iran would try to use its oil production as leverage and cut exports to try to tighten the world oil market, push up the price of gasoline in America? Or I guess that would cost them dearly financially.
Indeed. Iran has been trying to walk a fairly fine line over the last 18 months or so. They, of course, have increased their oil production, increased their oil exports. They really only have one customer, and that's China. If China doesn't take their oil anymore, they can't export it anywhere else. They're selling a discount, right? They're not making as much money as if they were selling it on the open market. They can't sell it on the open market because of U.S. sanctions. So I think the Iranians will continue to do what they've managed to do, which is sell what oil they can to the Chinese. Trying to use that oil as a point of leverage seems like a risky strategy at a moment where Iran's leadership is trying to manage the risks. As I mentioned, they're very wary of escalation. They do feel the need to retaliate for the Haniyeh assassination. If they don't, they'll lose face, they'll lose credibility. But they're in a dilemma where most of the options look like bad ones.
I guess it's the cynic in me, but I look at the big Middle Eastern oil producers and I think if they really wanted to express support for the Palestinians in Gaza, they could say, right, we're putting on some kind of an oil embargo, but they haven't done that.
No, they haven't. They've put out statements. Saudi Arabia and others have been very supportive rhetorically for the Palestinians. They've conditioned improving relations with Israel on, some kind of progress on creating a Palestinian state. But they have other priorities, right? They have to meet their budgetary needs. They have to meet their fiscal requirements. They have to keep exporting. There, of course, is OPEC's ongoing attempt at market management to try to keep prices as high as they can while still exporting what they need. So, making a market move to try to exert pressure on either the U.S. or Israel doesn't really look in the cards at the moment. They've got other priorities when it comes to energy policy.
What are the prospects for oil prices, do you think, over the next few months?
Well, I think attention has shifted from the potential of a disruption in the Middle East more towards fundamentals, which are starting to look a little bit dicey in the second half of the year, right? There's some discomfort with the Chinese demand growth trajectory. There's discomfort with where demand growth may come from other sectors, other potential growth sectors. And then there's the ongoing issue of trying to get barrels off the market. OPEC's been trying to improve compliance from Iraq, from Kazakhstan, from Russia, which of course is their partner through OPEC+. They've had a reasonable amount of success, but they still continue to hit up against supply increases from the US, from Guyana, from Brazil. So as far as trying to protect prices, I think their target has to be shifted downwards. They were trying to protect prices at $90 a barrel. $80 a barrel looks a little bit more doable, but with prices in the 70s, it's looking to be a pretty significant challenge, especially when they are at least tacitly committed to bringing barrels back on in the fourth quarter of this year. They've committed to relaxing supply cuts. They may have to push that further into 2025 to try to keep prices somewhere close to where they want them to be.
It's interesting. You have co-authored a book on Iran in the early 50s, of course, when the Britain and the US were interested in preserving the flow of oil from that country and their control over the industry. So you have a deep knowledge of Iran. Where do you see that country going over the next 10 years? Is there any possibility of a move towards liberalization and democracy, or more comprehensive democracy?
Well, there have, of course, been false starts. There was the 2009 Green Revolution, where we saw massive protests in the streets of Iran's major cities around the time of a deeply contested election. There were, of course, the 2022 protests surrounding the death of Mahsa Amini and the issue of hijab, which were brutally put down by Iran's security forces. My view of Iran at the moment is that there could be a narrow window for at least a decrease in tensions. It depends on the U.S. election, for instance. I think a Trump administration would be much tougher on Iran than the Biden or Harris administration in the U.S. Iran's own government is undergoing something of a limited transition. There's a new president, Masoud Pezeshkian, who at least is outwardly committed to trying to reform, to trying to reduce some of those social pressures and pursue sanctions relief. But long term, I don't see significant changes. The Islamic Republic is in a pretty strong position. Security forces are in reasonable control. Supreme Leader Ali Khamenei is 85. He's not likely to be with us much longer, but the idea of someone who is more open, someone more friendly to the West, succeeding him as Supreme Leader of Iran doesn't look very likely. I see much more continuity than change for the foreseeable future.
Thanks very much.